You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster, Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from SEBO. The Option Block is brought to you by SEBO. When it comes to trading volatility, trust SEBO, the creator of the VIX Index, for in-depth and relevant information. SEBO's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is time once again to commence our broadcast week here on the Options Insider Radio Network. Hope you all had a great weekend. I had a great weekend. Took my son's flag football team out to one last run for a Super Bowl championship, and I'm pleased to say we succeeded. Good run. It's been many seasons now with these same kids. Watched them grow up on the field. And to see him go after it one more time and take home the gold was a proud moment indeed. I tweeted it out. Thank you to all of the kind words everybody had. It's awesome to watch these kids. It all goes out to the kids at the end of the day. We had some wiseacres out there. I think it was Pariah Pants, one of our pro members on Twitter, said, "I assume all you do is run the option play," which, haha, A, it's funny, actually. And B, no, we do run more than the option. But it did bring a smile to my face nonetheless. So thanks to all the folks out there who engaged on that front. It is always fun to see the kids out there having fun. Of course, we're having fun this week. A lot of fun stuff on the docket for you folks to look forward to. If you want to get even more content on top of that, including pro Q&As and, of course, options oddities, as well as live access to this, everything else we do, you know where to go. Theoptionsinsider.com/pro is the place to go. Click on that button. You will have instant access to 200 plus hours of freaking content. That is a lot of content, with some of the best minds in the world of options and derivatives answering all of your many and varied and sundry questions, and myself and the Rock Lobster really diving into a whole mess of crazy trading activity that is intriguing, useful, and or profitable, depending on what you're up to over there. So a lot of fun there. And of course, giveaways. This giveaway our next pro trading crate. You guys are going to bankrupt me all stuff I'm sending out to you, but it's fun. Alan, congratulations to you, one of our OG members, winning a second pro trading crate. So keep your name in the hat. You never know what good things can happen to you out there. TheOptionsInsider.com/pro is the place to go. We are joined now by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management, as well as, of course, the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. I introduce them now, listeners, because it is time to commence our broadcast week in high style. Yes, it is time for the segment you all know and love, a few of you dread, in which case, just fast forward a few seconds, because it's time for the Guess That 80s Wrestling Trivia segment. Here we go. All right, there we go. I have to find the Jeopardy button. It's buried. All right. Or I should say the non-licensed, undisclosed theme music. All right, here we go. Ladies and gentlemen, fans of all ages, it is time. I have opened up the chat now. I haven't even given any clues yet, so don't put a buzz in yet. But if you start hearing me giving the clues and you like what you hear, you want to type a buzz in there, I will allow it. Just not yet. Let me start talking first. All right. So today's wrestler, known throughout the 80s as a heel, a very, I would call him a solid mid-card heel, and that's one of the problems people had with him, because he was actually a really good wrestler, a very technically proficient wrestler. Some might say he was very good at wrestling, and that was a problem people had. Like, hey, this guy should win more big titles. He should be probably a bigger name than he was. Again, he was a weird heel, listeners, in the fact that unlike many heels, they go out there and they, Hogan would wipe the floor with them, or Warrior, some of the big faces. This was a heel who never really lost, except for one epic match when he did lose in a big fashion out there. That was a big part of his gimmick out there. Hint, hint. He did go on. He wrestled into the late 80s, into the early 90s. Then he kind of went away for a bit. Came back as a surprise to a lot of people in 2002, of all things. And in the Royal Rumble, was like a number 25, I think. Everyone was excited. Oh, my God, this guy's back. A little older then, but still fairly young by wrestling terms. And then, unfortunately, died like a year later, very early. So he died very young, which kind of cut his career short, obviously, as well. So unfortunately, he followed the trajectory that many wrestlers did to an early grave out there from the 80s. But a solid mid-card heel, very well-known, very technically proficient, was unbeaten until one very big loss. Uncle Mike and Mr. Meatball, of whom am I speaking?
Are you talking about Mr. Perfect?
Yes, of course I'm talking about Mr. Perfect. I was trying to get around the unbeaten thing, but it's hard. It's hard. That's kind of his main.
Kurt Hennig.
Yes, Kurt Hennig. Mr. Perfect, Kurt Hennig. Yes, who was not beaten, and now you got a point. I'll give you, since you won, I'll give you first crack at the bonus question. I'll give it to Uncle Mike. Who is the person who gave him his first loss?
I'm going to say Hulk Hogan.
Okay, that's interesting, because it's actually a debate as to who actually won it. So I can maybe accept Hogan. I will go out now to Uncle Mike. I'll give you a chance. There are two other names that I will take, because technically he lost on like a WrestleMania, but also technically he lost in like a couple of house shows, and they kind of count that too. So there are three names that actually could be. So Uncle Mike, who are one of the other two? Steal a cap point.
At first, I want to give some umbrage for this question, but with that being said,
umbrage for Mr. Perfect? How dare you take umbrage, Mr. Perfect? He was great.
No, umbrage for the question that you're giving and how this was phrased, because it's technically not true. With that being said, I will go with Macho Man Randy Savage.
Unfortunately, no. The official guy who beat him, I think it was like WrestleMania 3 or 6 maybe, was Brutus. Brutus beat him officially, Brutus Beefcake, in WrestleMania. That was his official first big loss. But they say in the house shows, Hogan beat him, and also on like some MSG special, Warrior actually beat him. So technically he did lose twice, but the official big deal first loss was supposedly to Beefcake. So actually, Mr. Meatball, taking a point and a half here. So slowly closing the gap, which you need, because you have a long way to crawl back. There you go, listeners. Are you a fan of Mr. Perfect, a.k.a. Kurt Hennig? His son actually wrestled in modern-day wrestling for a while. I think he's done now, too. But intriguing stuff. Excellent technical wrestler. Good heel. Unfortunately, had a lot of other bad habits outside the ring, which led to an early demise, such is the way with a lot of these guys, unfortunately, as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block, the portion of the show where we break down what the heck is trading. Another one of those kind of mixed days. The S&P and the NASDAQ wanting to rally, getting their rally boots on. S&P up about almost 0.4%. The NASDAQ up about 0.2%. The Dow going back to its old laggard role. They kind of reversed gears on Friday, which was interesting to see. Now Dow back to negative about 0.15. So all in all, not a huge mover day. But of course, we are still well north of the 4,100 level we were at just not that long ago. It seems like a couple of days ago. Or we were hovering around 4,300 now in the S&P, which gets us to our question of the week. I'll get back to that a little bit later. It's a fun one out there, listeners. But intriguing stuff nonetheless. That means as we kicked off the show, we had VIX still shy of the 15 handle. It was at about 1490 when we kicked off the show. That puts it down. It's still pretty much hanging out there. Down almost a full point, about 0.9. VVIX 86 up about a point. VXX 30 3/4 down 2 points. UVXY 2.5. At this point, who cares? Down 0.3 of a point. SVIX 2290 up 1.3 points. Pretty much every day this past week has been a new all-time high for that name. So a banger time for SVIX. Are you out there trading SVIX, listeners? UVIX 7 even down a point in the other direction, of course, and VolQ bring up the rear 1790 down about half a point. All right, Mr. Meatball, you are our winner this week, so we will start with you. First off, any enduring memories of Mr. Perfect, a.k.a. Kurt Hennig? And then B, what's catching your eye out there in the markets today, sir?
Yeah, I was a big fan of him. I loved his perfect plex. I thought he was technically really good. The feud with Hogan was always interesting because Hogan did not know how to wrestle, and Kurt Hennig did. But he got that big push.
Are you implying the leg drop was not the best move in the history of time, sir?
No. But he got that big push against Hogan, and then they just stopped for some reason, even though everybody loved him. He was probably, one of the most loved, hated wrestlers out there. When you say like everybody, he was such a good heel that people actually really liked him. And that was what I remember about Kurt Hennig. RIP. Market's interesting. We're up. We're pushing against 4,300 in the S&P 500, but the Russell 2000. I mean, at one point it was down 30 today. Continues to be the laggard, and the NASDAQ continues to be the darling. We're buying up. We bid up Apple 2% on a VR headset. How's the VR headsets going for Meta? How's that worked out for them so far? How did Google Glass do? Google looking stronger. NVIDIA taking a breather today. I think you could see it take a breather for a little bit. But Vol just falling off a cliff. They came in the last 2 days, Thursday, Friday, with a little continue today, and just made the VIX go get its own switch and just beat the living daylights out of it. And we may continue to see some of that based on the way Vol has been trading and the way we've been moving.
Why did VIX have to get its own switch? Why couldn't they beat it? Why did it have to beat itself?
Yeah,
it was so badly that it had to beat itself. That they have taken it out to the woodshed, to mix all of your metaphors out there. Yeah, it's just been a Vol drubbing. At this point, some of those crazy offers I'm working in my June 15 puts, they might take me up on some of those. So.
Oh, those were amazing. Just you may get billed on those. That was a home run trade by you and I.
I got some ridiculous offers. We shall see if they get taken, but we're getting closer every minute here. So yeah, intriguing stuff afoot out here. Let's go out now to the man who's never short umbrage. Here I am, rock lobsterless on the show today. I thought we'd be umbrage free, and none other than Uncle Mike, Mr. Happy Pants, is the one taking umbrage at everything. So you know what I think it is, Mr. Uncle Mike? Deep down in your heart of hearts, you're kind of grumpy because I took home another I-9 Super Bowl championship this weekend, my final one somewhere. I forgot how many, like over a dozen now, and you never got the brass ring. I think that's where this is coming from, sir.
I mean, that's, I guess, part of it. I didn't even think of that yet, but now that I think about it.
Because you have been a little salty today, unlike your usual form, sir.
Yeah, I mean, I'll be honest. I mean, I coached I-9 for, probably 10 seasons. And I'm guessing something, I don't even know how many. I got so many thank you plaques, I don't even know. But I-9's a great organization for kids' sports. I absolutely love it. But with that, I never really quite had the athletes to win it. But we seemed like we took third place every year, and we took second place one year. But for the most part, we were always competitive. We could always beat the league champs one week, but we could never quite get it done. And you've done that. So I got nothing but respect for you. It's like a college coach being mad at an NFL coach. So I mean, I guess I really don't have umbrage. I mean, you're the man. You got all those rings. So it's more of a respect thing, I guess, with the I-9.
Yeah, I mean, he's reached the pantheon of
I've reached the pinnacle of 14 and under flag football, baby.
U14 recreational sports.
I have to retire my clipboard now.
Honor.
I feel a little sad. Maybe I'll have to see if the Bears need a little help next season. We'll see.
They do, but that's another story. In terms of the umbrage that actually does exist, one of my all-time favorite wrestling matches as a kid that I actually paid for a videotape on from Coliseum Home Video was of the Road Warriors, and they had two matches, the Hawk and the Animal. One of them was against Kurt Hennig and Baron von Raschke. Beat the living crap out of him. I mean, he's just bleeding, and I mean, they just beat the crap out of Kurt Hennig. So that was one loss with Kurt Hennig, and another loss with Kurt Hennig long before the Beefcake incident or any house shows. Another one, Larry the Axe Hennig, his dad, happened to be broadcasting the one where they beat the living crap out of him. So he had to watch his son bleed, get chairs put on his head, and Larry the Axe Hennig didn't like that. So Larry the Axe Hennig, wrestling legend, came out of retirement for another match to have a father and son tag team match against the Road Warriors. Did they win? Absolutely not. The Road Warriors beat the living crap out of them too. So my umbrage is with the fact that anything that you can possibly do to try and do things that are anti-Road Warrior, I mean, that's you, Mark. And you just omitted two very key losses from Kurt Hennig's career.
I don't know if that's was he Mr. Perfect at the time? This is during the Mr. Perfect gimmick, right? I don't think he was Mr. Perfect when he was working some stuff with the Road Warriors. By the way, funny you mentioned Larry the Axe, because one of our pro members in the chat, Age Delaquire, is saying Larry the Axe Hennig was quite a good wrestler as well. He said that before you even said that. So a lot of love for Larry the Axe Hennig today on the show. Never thought we'd get there, which again shows the deep rabbit holes we go down on this show, which makes it awesome. All right, Mr. Uncle Mike, aside from your love for Larry the Axe Hennig, sir, what else is catching your eye today?
I do respect Larry the Axe Hennig, but everyone knows on the show of my love for the Road Warriors, Hawk and the Animal. With that being said, today, it's like the debt ceiling issue has been solved, so we're back to the Lego land. Everything is awesome again, or at least not bad. My concern with this market right now is it feels a bit too complacent in that we're knocking on the door, at least as of a couple minutes ago when I looked at my real-time quote. We have not been able to break 4,300 in the SPX as of yet. We came to 4,299, have not broken 4,300. I think we can tick over it at some point today, possibly even during the show if we have not already. But I think that's just another key number with which we have to get through. And you had pointed out earlier, Mark, the fact that we were at the 4,100 level. That was kind of our magnet before. I think we called it the Rock Lobster magnet. But now we're at 4,300. So there's a lot of complacency in this marketplace right now. And, woe to the complacent. Even a biblical verse is woe to the complacent. And so you just need to be concerned with this. What I like about this market right now is that obviously it's higher. But this does give you the opportunity to either sell some calls or buy some puts or do something along those lines with which you can take some deltas off the table. And if you're buying premium or if you're buying puts or buying put spreads or whatever way with which you want to hedge your longer term portfolio, they're not that expensive right now. And with the VIX coming down like it has, it might not be a bad idea to take some deltas off the table. And a way with which you can do that is to buy some cheap premium, or cheaper, I should say, than what it was. It may or may not be cheap depending on where it goes. The benefit of that is that if the market continues to scream higher, then you really didn't pay that much for it. But if we do come back down, you didn't really pay that much for the protection. So I would encourage everyone to consider looking at that. It may not be appropriate for what your individual needs are, but it doesn't hurt to look. That's for sure. In terms of on the macro level, I believe we had some manufacturing data, or we had some announcement that came out at 9:00 this morning that put the bonds into a little bit of a rally, or at least brought them back to where they were at the open. But aside from that, we've not really had a lot of major news today, and we have not had a lot of major market movements today. So with where we are now, we're kind of climbing the wall of worry, or we're just continuing to go higher because the market wants to go back to 4,800 where it was a couple years ago. One of those two things. Either way, make sure you're prepared for either scenario.
All right, let's see what the market is prepared for in terms of volume. If you're expecting, I should say, another banger day out here, the VIX just blowing the doors off, everything else blowing the doors off, you might be a little bit surprised. Again, it kind of depends where you're looking today, what kind of day you're having, listeners. VIX, for example, kind of worn out. I mean, I get it. It's been putting up ridiculous numbers of late out here, listeners. So it's kind of hard to keep those numbers up forever, right? Let's see. How many contracts did they end up putting up? 1.76 million contracts on Friday, listeners. So after a day like that, I think VIX has deserved and earned a little bit of rest. Only 320,000 contracts on the tape today. So nothing really blown up the skirts out there in VIX land today. The ADV hovering around 829,000, which again, just put up actually more than 2x that. So it's understandable why the ADV is looking as frothy as it is right now. SPY also looking a little bit frothy. 4.9 million. Again, that's more than half of its ADV. Its ADV is only 8.5 million. So SPY, once again, it's a day that ends in Y. SPY can put up numbers at the drop of a hat, and it's doing so again today. The S, 1.46 million, again, kind of shows you how the worm has turned out there. 6 months ago, definitely a year ago, we would have seen that number and be like, holy crap, S is over 1 million contracts by this part of the show. This is insanity. This is a banger day. What the hell's going on? Now, the ADV is 2.75 million, and 1.5 million is kind of expected. In fact, it might even be a little light. So intriguing stuff out there. Small caps. Uncle Mike was just talking about all things small caps. I'm sorry, the meatball was talking about all things small caps. They're off nearly 1% today, listeners. 0.9%. We're just talking with Uncle. I get everybody confused today. Start of the week, listeners. I needed more caffeine to start the day. But yes, we were talking with the once and future Dr. Vix on Friday on Vol Views, and he was talking about just kind of the ridiculous rally that Russell has had recently to try to catch up. It's been getting annihilated all year long. It was actually down on the year at one point not too long ago. Giving some of that back again today, off nearly 1% right now, or about 0.9% out there. Good for nearly 1 million contracts already, 939,000 contracts. The ADV, 1.08 million. I was out there saying, I didn't think this ADV was sustainable really in IWM, and hey, I've been proven wrong. So far they're going to hit it in a few minutes at this point. So yeah, crazy town out there in small caps. And the Qs, 1.75 million, the ADV about 3 million out there. Let's shift gears to single names, see what's going on out there, listeners. How much does it cost you to break it to our top 10 today? And you know what? It's respectable. I will call it that. I will call it respectable. It is 196,000 contracts. Again, that's not, your 350s or so that we've seen on some banger days. It's also not, 150 or anything like that. It's respectable. Barely respectable. But it just makes it under the radar out there. That gets us to Coinbase. I think we have a lot to talk about today on the crypto rundown coming up in about an hour and change here on the network, listeners, because, man, Coinbase taken to the woodshed today, off about 7.25, trading 57 and about a third, or a little over 11%. News that the SEC is coming for the folks over there at Binance. Kind of wondered about that for a while, and that's just kind of wiping out the whole crypto space right now. I know Uncle Mike will just be in tears over this. Bitcoin back down to 25,000, ETH back down to 1,800. Solana hanging out about $20 again, off 10%. So yeah, all these names were looking pretty good. These days, not so much. Remember the CEO of Binance, he was the one that kind of kicked off the whole FTX thing when he said he wanted to liquidate a bunch of his tokens out there, and that's kind of what caused the whole dam to burst out there. Some people say he kind of manipulated things on purpose, which he probably did. He knew what was going on there. But nonetheless, the SEC now coming for him. So that's dragging down the whole crypto space. More on that a little bit later on the crypto rundown. Number 9, good old Meta. They haven't had the VR space to themselves. Obviously, there are other players. There's Valve and HTC headsets, I should say, out there. Sony has a headset. But still, in terms of big name players in the space, Meta is kind of it. Of course, Apple diving into those waters today. It's usually never a good thing when Apple enters your market, yet Meta up today, up about a third of a point right now. So managing to rally. It looks like they took it down to about 269.5 before rallying it back up to close to 273 right now, 272.92. Up about 30 cents, but off the lows of the day. So I don't know if I see, unless you kind of buy the argument that Apple's just going to create more awareness of VR in general, in which case maybe there could be a argument for the rising tide lifts all boats. But at the end of the day, when Apple's peeking around the corner in your play space, it's usually not a good thing. They're going to come take some of your toys out there. Meta, 232,000 contracts, number 9 out there. Number 8, you don't need me to tell you why they're in here. AMD, the other half of our chip zone, 118.16, up about 30 cents today. Good for 263,000 contracts on the tape. Number 7, this one's been a frequent offender for the last week as well. This is SOFI. This is kind of going back to our contagion fears days of March. This thing was circling the drain. Now it's rallying the other way. 7 and about a quarter right now, up about 20 cents. Good for 288,000 contracts on the tape for SOFI out there. So an intriguing one to watch. And then number 6, the other big AI name everybody talks about these days, not just NVIDIA. This and Microsoft were the two that really kind of got that battle rolling. This is, of course, Google, a.k.a. Alphabet Class A, 126.75, up a little over $2 today. Just, again, probably just general AI love, as Meatball alluded to. Their foray wasn't really into VR. It was more mixed reality with Google Glass, but that's kind of an infamous failure out there. So that's a good example of how not to do this kind of thing. I haven't had a chance to check out Apple's announcement yet. I've obviously been busy hosting shows, so maybe some of you folks will tell me if it looks cool or not. We shall find out. Number 5, the Amazonians. Again, a name that you don't hear bandied about in the AI wars, even though I'm sure they would love to change that. They would love to be front and center in that conversation because that usually translates into a 20+% boost in your stock. 124 2/3 right now, up about 40 cents for the Amazonians. Good for 379,000, which again shows you what kind of a light day we're having. At number 5, we're only at 379. So not exactly out there in the single names that we're seeing a lot of the action. Again, man, look at this one. Palantir up nearly a full buck, 15 and about a half, whereas trading right now 6.5%. I think there's some news. They got a new Defense Department contract or something along those lines. So Palantir just piling good news upon good news out there, making my missed put sale look worse every day. 15.5 good for 404,000. Mr. Meatball, you were saying they were on the march to 20, and so far you're not looking that bad in that estimate, sir. Man, this has been just a crazy town out here in all things Palantir. If you want the more expensive version of Palantir, listeners, at least in terms of AI love, you got to go out to NVIDIA, 390.5 off 2 3/4 or 0.7%. I think people who own it will take that. It pops 25%. It sells off 0.7%. I think you'll do that trade all day long. NVIDIA, 487,000 contracts. Again, good for number 3. Number 2. Yes, number 2. I haven't said this in a while. It's Tesla, 1.46 million, up about 3 2/3, 217.60 right now, about 1.7%. And the number 1, the big dog, it took announcing its first real new product in, over a decade probably that I can think of. It's the fruit company back on top ever so slightly, 1.48 million versus Tesla's 1.46 million. Apple, 184.05 right now. Looks like it got up to a new high this morning of 184.95, up 310 right now. So I guess we're buying the rumor, and we're really buying more of the fact. We're loving the headset. So intriguing stuff out there. Headset love, carrying Apple to new highs. Speaking of new highs, we weren't quite there last month, listeners, but the numbers hot off the presses from our friends over there at OCC for the month of May. And we were pretty darn close. The question everyone's been asking, A, can this year be up over last year? I think we're on a pretty good course for that. And then B, can we possibly do what we did again in March, that ridiculous 1.1 billion contracts? And the answer in May was almost. I know we were talking about the advisor's option. Our buddy Matt was thinking May was going to come in lower, but the number's in now from OCC, 949.1 million contracts in May. Not the biggest month ever. Obviously, that would be March, but the 3rd busiest month ever. So, again, that's pretty respectable. Up 9.5% from May of last year. And again, the third busiest month in the history of the business, so you can't really shake a stick at that. ADV, 44.5 million contracts. That's also up 6.6% compared to this time last year. So again, if you just crunch the numbers from now to last year, we're on pace to beat last year's numbers by almost 7%. So yeah, that's a lot of volume. And again, within spitting distance of 1 billion contracts. In May isn't always, the most explosive of months. It's leading into that summertime doldrums, The end of May can sometimes be a pretty quiet time. So the fact that we put up that much paper, and they're obviously the debt ceiling, a lot to do with that. Lately, we've seen we need some sort of catalyst to really get us over that hump. In March, it was, of course, the contagion fears. May, it was the debt ceiling. Will we have one in June? Don't know. But index options also having some highlights here, up 32.5% in May from the year ago. Again, a lot of that obviously driven by the 0-day phenomenon that is just engulfing the equity space these days. So intriguing stuff out there. So there you go. The answer to the question everyone has on their lips. Can we possibly do it again? The answer for May was almost pretty darn close. And the third busiest month in the history of options. Nothing to shake a stick at out there. Let's go out to earnings front. Let's see what we've got. We've got still looks like we're still waiting for the new hot off the presses earnings move result and earnings season reports from our friends over there at ORATS. Meanwhile, the most recent report we just ran from Friday, we were hanging out at 100% exactly. Again, I can't recall the last time I saw that, where we are moving exactly as much as the straddles are pricing in. Kind of a bit of a weird phenomenon out there. So check that out for yourselves, theoptionsinsider.com. Click on the options news and articles tab, and you too can see the just strangeness that is the earnings season right now. Week 1, 144%. Week 2, 98%. Week 3, 103%. Week 4, 87%. Week 5, 80%. So that was kind of the laggard of the cycle. And then week 6, taking it back with 116%. So all of that total averaging out to 100%. Just a bit above our long-term average right now of 96%. So intriguing stuff out there. If we finish this season at 100%, that would be very strange. So we'll keep an eye on that one for you listeners. As we keep on rolling, let's see what our eye of Sauron has its gaze fixed upon. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we get weird, we get wild. And you know what? As you could probably tell from the most actives, not exactly a blowing the doors off kind of single name day. So we'll see. Maybe we'll highlight a couple of them. I think we have a bunch that we can still pay off from trades that we've been tracking. So maybe we'll pay off a few of those as well so we can clear out the docket and move on from these trades we've been keeping an eye on in some of these cases for a long time. Let's go out to Evolve Technologies Holdings, Inc. first. Say all that 5 times fast. Looks like they're based here, but they also have subsidiaries in the UK along those lines. I'm not sure exactly what type of technologies they are creating, but either way, ticker symbol EVLV, hanging out pretty much unched today. Let's see, on the year, they were trading 2 3/4 a year ago, so it's been a pretty good year for them, up about 116%. They kind of bounced around in that range. They sold off to about $2 in September of last year. That was the low for the year for them. Then they rallied it pretty quickly before the end of the year. By November, they got up to $3.89, so that was a nice run. They had almost doubled by late November. Then they kind of gave it up again, right back down to close to $2 by December again. So something going on in that September to December timeframe where they rallied hard and then came right back down again. Then they kind of vacillated in that 2 and change realm for a while. And then started rallying again. Looks like in April it kicked off. They got up to $3 in April, and then they shot up. Like by about May 18th, they were trading mid 5 handle, 560. They hit 630. That was just last week. Now they're hanging out a little bit shy of the 6 handle, 594. So been a nice couple of months, been a great month. It's up 55% just in the last month, listeners. So nice run, 66% if you go out 6 months. So a nice run here for Evolve Technologies Holdings, Inc. Let's see what our Eye of Sauron found out here. Maybe is someone feeling this juice will continue, or are they fading this? Let's see. Let's go out here. Looks like our Eye of Sauron found that 5,000 of the October 5 puts going up for 70 cents. This was pretty close to the bid. This was an 85 volatility, listeners, if you are intrigued. So it's a fairly juicy put sale if they are writing these. The stock was pretty close to here, 587 when they sold these puts. So the stock has moved a little bit, but not a ton. Worth noting, there are going to be earnings between now and October expiration. The next announcement is in August 9th. So you got at least one announcement baked in here for the OC5 line. Intriguing. I mean, they're getting a fair amount of juice, 70 cents. But as I also just mentioned, you go back to early May, just a month ago, and they were well below the 5 handle. So is 70 cents enough at this point? Would you need more juice to merit selling these if you were going to sell these? Or maybe you're like, you know what? The worm has turned and evolved. I'll buy all you can give me below the 5 handle. In particular, 430 sounds like a good level to me. I'm curious, Mr. Meatball, what are your thoughts, sir, on these potential line in the sand puts here? And everyone's favorite name, Evolve Technologies Holdings, Inc.
Yeah, these appear to be line in the sand. They appear to be a trader just saying, hey, I'll buy the stock here, but I don't think I'm going to have to, and I'm going to pick up some yield. Makes some sense. We've been seeing a lot of that in some of these names that have been getting smoked.
Would you sell these for 70 cents? You like these?
What 70 cents on a $5 put?
Yeah, I'm intrigued. Would you do this? Would you do so?
Yeah, I mean, I don't know enough about the company to say yes or no, but you're looking at a near like an 18% yield on them. It's not a terrible sale.
Terrible. If
you know the company and you know about it. It's not a terrible idea. I don't know enough about Evolve the holdings to make a yay or nay decision, but
you love Evolve.
from a pure option play, if you laid this out to me, I would say, yeah, that kind of makes some sense.
You know, all your kids' college funds, all purely in Evolve. It's okay. You can tell us. It's a safe space. What do you think, listeners? You like those puts?
Well, that was me unloading those puts. You didn't know that?
That's you dumping all those puts. I thought it was small size for you, so I didn't think it was you. I mean, 5,000 lot. You don't get out of bed.
It's an interesting one. I don't hate the play, Mark. What do you think?
Like I said, pure premium wise, you're right. I don't hate it. Just looking at the chart, it was trading well shy of $5 just a month ago. So on the other hand, that gives me a little bit of pause. But hey, you got to have movement to generate 85 vol at the end of the day to give you 70 cents on these puts. Also, It's a long time to be wearing these puts all the way out to October. You're going all the way through an earnings cycle. So I don't know, that far out for 70 cents. I might not, just given the way this stock has been. But I can see why if you just looked at the numbers and the math and said, hey, if things hang out between now and October, I'm looking pretty good, because you are.
Yeah.
So it's intriguing. Listeners, you like these 70 cents? Do these float your boat? Or are you maybe a little bit more on the fence given how that chart has performed of late? I'm curious. It would be a good question of the week if anybody had actually heard of Evolve, which chances are probably not. Instead, let's keep on rolling. Like we said, let's pay off some of the names we've been looking at. How about another indie darling everyone loves, like INDI Semiconductor Inc., ticker symbol INDI, INDI. This is obviously a semi name out of California. And let's see. Yeah, we'll go back a year and then we'll kind of go from there. A year ago, they were trading $7.88. And then they kind of came for it. It was like the first time because they sold it down to about $5.70. Then they rallied it again. They got it back up to about $9.20 or so in November. Before they came for it again, they drove it down to around its low for the year. Looks like of about $5.25 in December. Similar levels to it got down to back in June. Then they rallied it again. They got it up to, looks like the high for the year of $11.12 on March 3rd. And then they came for it again. Drove it all the way down to about $7.50 on April 28th. And then that was right around the time of our trade, listeners, because back on April 27th, the day before, Looks like somebody maybe was feeling a little bit of the fear, which is understandable. They crushed it from $11.12 all the way down to $7.50 in the span of, looks like, a little over a month. So they were sweating a little bit out here. They said, you know what? We can't take the pain anymore. Somebody came in and scooped 5,807 of the May 7.5 puts. So those were pretty much at the money puts. They paid 55 cents for those. They lifted the offer. That was a 102 vol, listeners. So no small amount of juice. The stock at the time when they bought these was exactly $8, actually. So a little bit higher. So they were sweating bullets that this thing was going to start breaking lower. They came back in and bought more, 5,791, paid 55 cents again. And then they did a total of 14,000 on the day. So they were really sweating this stock just falling out of bed, listeners. And again, looking at the chart, you can kind of see the stock had fallen out of bed pretty aggressively. And let's see, back in December, it had been trading about 5.25. So it could easily blow through that 7.5 strike. So in their eyes, it was worth the 55-cent outlay. Of course, literally the second they bought those puts, listeners, the stock pretty much halted its sell-off, and it pretty much never looked back from there. The stock closed on expiration in May, $8.86. These puts were still open. So if you add up the trades we looked at, that's $638,000. If you add up all the volume that went up on that day, again, it's hard to tell what every contract going up that day did. But if you assume they were the same thing around the same level, then it's close to $800,000 that they dropped on these puts. If they're holding the stock, they're not super upset, though, because the stock right now is trading $9.50. So they've made a decent clip back, about $2 back on the stock that they're holding. But I'm sure they would be happy to have their $800,000 back in their pockets as well. Is that your takeaway as well, Mr. Meatball?
Yeah, I'm gonna guess they were not planning on that, but the stock has had a nice little recovery. Maybe their line in the sand was a true line in the sand.
Looks like they were spooked, and then they literally bought the low, listeners. So that's sometimes it works out that way. Sometimes you buy the low in INDI, sometimes you miss the put sale, or you miss buying the stock in PLTR. These things happen to all folks. Now, let's go a little bit farther out for our last one here. Let's go all the way back to March 20th. At the time, we were talking about Bloom Energy Corp. We talked about them before. They make these solid oxide fuels out there. So intriguing stuff out there. Ticker symbol BE. Let's see. A year ago, they were trading $18.88. And they rallied it hard. Remember that big rally we saw last year going into August? They rallied it up to $31.50. That was their high for the year. So they almost doubled this thing. And certainly from the low it hit, June of about 15.5, they did double it. Intriguing, nice pop here for Bloom Energy. And then they came for it again. By October 20th, it was trading back 16.25 again. People forget last year, around August, we got up to close to levels we are right now on the S&P. And then by October, we were trading 3,500 in the S&P. It was like this stock followed a similar trajectory, right back down after hitting those highs. Bounced around there for a while. They rallied it again in February. Again, the second big rally we saw in the market, up to about 25 2/3. And that seems like it ran out of gas there. They sold it off again. Let's see. Again, March 20th, the day we talked about our profile, they sold it off down to $17.20. And that's where our trade came in, listeners. Someone came in at that moment and said kind of the opposite of what we were just talking about. They said, you know what? This name's been beaten up. And I think this far is too far. We're going to draw a line in the sand here. We're going to sell 6,969 of the April 14 puts for a quarter. The stock at the time was $17.49. There were earnings, but not in this cycle. The earnings were May 4th. So they were going before earnings. And you know what, listeners? Again, it wasn't the most aggressive line in the sand. The 14 handle, not crazy. And it seems like this one worked out. The stock closed at $17.85 on April expiration. These puts were still open. And so they pocketed not quite $200,000, about $180,000, all things considered. So again, not a bad little chunk of change. Mr. Meatball, what are your thoughts on these Bloom Energy line in the sand puts that appear to have paid off?
Yeah, I mean, that's the whole point of this type of trade, right? You want to collect the premium. And the stock has managed to hold. It's been high, it's been low. but the level they sold has been a veritable line in the sand, you might say.
Some might say that indeed. Some might also say it's time to unleash the beast that is Uncle Mike, because it is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the strategy block, the portion of the show where Uncle Mike dispenses some options, wit, and or wisdom. Uncle Mike, sir, what do you got in store for us today?
I want to talk about cash. And
exciting. Sexy, some might say.
Well, I mean, in this day and age, it actually is exciting. In the history of our show, being in cash has never been so exciting. Can you argue with such a point?
Cash has never been sexier than today's.
It really has. So what I want to just talk about today is just the importance of having exposure to a money market and or a savings account in general. And so as an option trader, if you open, let's just say you're doing your trading account, you're opening up at Schwab, TD Ameritrade. Well, I guess you're not opening up at TD Ameritrade anymore because it's Schwab on the retail side of it now, from my understanding, but Fidelity or Interactive Brokers or whatever. When you do nothing, oftentimes, and every broker is different, of course, but when you do nothing, you're probably going to go to cash. So let's say you're selling puts, or you're buying calls, or doing condors or calendars, or whatever the case may be. But let's say you want to be in cash for a while because you're going on vacation, or you just don't feel comfortable doing a trade for a while, or you have some of your money in cash and you're working with the other parts of it. Make sure that you're in some type of interest-bearing instrument. Now, what do I mean by that? Well, you have some choices of where you can go with it right now. For example, there are money market funds that exist. There's money market ETFs that exist. A couple of them, BIL is a money market ETF that exists. I don't even know how many money market mutual funds there are out there, but I can't give a recommendation on what one to use for you because everyone is different. But I would definitely encourage you to have some type of exposure to something very short term with where you're going. Now, the way with which you look at money market funds is you want to look at what's called the 7-day yield. You don't want to look at previous year's returns, because if you look at a money market, the 2022 rate of return on a money market fund, chances are it's not going to be good because interest rates didn't go up until later in the year. And so you're thinking, oh, this thing only paid 1% last year. This thing's a garbage fund. Well, not necessarily. It could be good based upon what the 7-day yield is. Now, typically what I like to look for in a money market fund is I want invested in U.S. government treasuries 1 to 3 months in duration. If you go on a money market fund, some of them you can get money markets based upon municipal bond funds. They do exist. I personally don't feel comfortable in those because it's really not guaranteed by the federal government. And neither is the money market fund itself, because in theory, the money market fund manager could just blow it by making uberly awful trades. Highly unlikely, but it's possible. But I like things that are invested in U.S. government treasuries. And that's something that I look for when investing in a money market fund in some way, shape, or form. Now, the other thing with which you can do, I'm on a charity board. And so I'm the treasurer of the charity. And so with that, we cannot have things in securities, which U.S. government treasuries are. So what we're looking to do is put our spare cash into a savings account. It's FDIC insured. Now, with that being said, are you going to find a savings account that's paying worth a darn at a local brick and mortar bank? No, you will not, most likely. And if you do, please call me if you find one in the Chicago area. Most savings accounts that are paying north of 4% are going to be online savings accounts. Now, you may or may not be comfortable with that. That's your own personal preference. But what I'll be looking for, I just was appointed treasurer about a week ago. What I'll be looking for is something with FDIC insurance. And if it has FDIC insurance and it's online, I'm personally comfortable with taking that risk. There are online banks that do offer that through way of a savings account. So if you want the FDIC insurance and you're willing to do an online savings account, you can find decent money market, or not money market, you can find decent savings account yields when doing that. So With that being said, how would you like to up your performance by 4% on the year for just doing nothing? Well, as a money market man, or as a money manager myself, that sounds very intriguing and nice to me. And that's why I'm putting such an emphasis on this for today. And I would recommend that our listeners do the same. Get into the right kind of cash. You're leaving money on the table if you do not. And that is the strategy block for today.
Well said, sir, as it's time for us to keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everyone, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on for the rest of this week until our episode on Thursday. Let me pay off some of our listener questions from last week. Also see what you guys got in your brain really quickly here in the live chat. Looks like Nichols says, hey, I'm late. What did I miss? What's this sexy cash thing? Yeah, cash is pretty sexy. If you miss Uncle Mike's strategy block or any part of the rest of the show, you know where to find it. It'll be up on the podcast post-haste a little bit later today, so you can check out all those segments you may have missed. I get it. People are out there running around. You can't always be there live for everything. We get it out there. It's like we got Age asking, what's the second pro trading crate? Yeah, he won his second. We didn't send out a second for the month. He's one of our original members. So he won way back in the day, and he won another one last week. So there you go. He's won his second now. And I guess it just pays to be a longtime member of the club there. You can win multiple pro trading crates and proceed to take money out of my pockets every month. I'm just kidding. I love you folks out there. We love sending you all this cool stuff because it's got to go to somebody. Might as well go to you folks out there. And some of it is pretty cool. Every once in a while, we look at what we're putting in these boxes. I'm like, man, we're giving that away. Probably could sell that on eBay. It's a bit of a historical item from the world of options and derivatives. And yet, there it goes, out to our pro folks over there at theoptionsinsider.com/pro. You folks also weighed in on our question of the week last week. We asked you guys, many of your favorite names are trading at or near 52-week vol lows. So which one would you rather buy 1 month volatility in right now? I gave you 4 choices: Apple, Microsoft, the S, or Tesla. And Tesla edging it out at the end, 38.8%. Followed by number 2, the SPX, 32.7%. That was intriguing. Microsoft, 18.4%. Apple, no love, 10.2%. It hung out at around 5 to 7% for almost the entirety of our poll, which was kind of interesting. I wonder if they could see. We knew this was coming, so I think this move alone would have made at least a few more people pick up Apple. Apple, we've been talking about for so long how cheap Apple vol is. I thought just name recognition alone, Apple would do better. But Apple bringing up their rear in our poll. That goes to show you can never underestimate you folks. You're always full of surprises. This week's question of the week just went live a few minutes ago, listeners. We're going back to kind of a broad macro question this week. Kind of like to get your pulse on this kind of stuff. Beginning of the year, middle of the year, which we're coming into, and at the end of the year. And so quite simply, we've seen a lot of green on the screen this year, but we've also seen aggressive bursts of selling that can turn things red quickly. So quite simply, will the S&P 500 close positive on the year? Heck yes, or heck no. Very simple. Let's go out to the greasiest of meatballs first. Mr. Meatball, what is your vote? S&P closing green or red on the year? B, what do you think our audience is calling for? And then C, what are you keeping an eye on in the market until the Thursday show, sir? Oh, no, you pulled a rock lobster.
I'm trying to do the right thing by muting and, when Mike's talking.
You need a big flashing mute button so you can see the lights so you know when you're muted.
Yeah. That's a really interesting question because, the S&P has been lifted so much by the kind of the Mag 7, as Morgan Stanley is calling them now. And it's just a matter of when these names do see some profit taking, does the money flow into industrials and financials and stuff like that, or does it go to sit on the sideline? And I think that's kind of the big question. So does it end up from here? If you force me to say something, I would say yes. But I don't know that it'll be marginally a lot higher or lower than where we are right now.
Momentum-wise, I could see why people would just go, yes, just given what we've seen of late. But you're right. Are they calling it the Mag 7 now? Is that what they're calling it? That's
yes, they're the Magnificent Seven.
That's both horrible and completely appropriate at the same time.
It's a sign of the top of the market.
It totally is. It totally is. So I understand it. It's kind of funny and both horrible at the same time. And I'm also a little mad I didn't come up with it. So that's 3 reasons to hate it. But intriguing stuff nonetheless. I like to think I'd come up with something a little bit more nuanced. But we shall see. Uncle Mike, speaking of nuanced, what is your prediction in this poll? B, what do you think our audience is predicting? And C, what are you keeping an eye on until the Thursday episode?
Well, first off, we could have called it the Sexy 7 or the Super 7. Those are just 2 names that came to the top of my head.
I think Super 7 is taken, but Sexy 7 we could certainly go with, yeah.
Well, there you go. What's Super 7? What's that taken from?
They make some sweet, sweet 80s collectibles, some of which I have in this studio right now. Looking at me right now.
Oh, well, good to know. Yeah, and my answer is will it be up on the year, meaning it has like the 400 or 500 point cushion from where it started the year? Then my answer is heck yeah. In terms of will it be up on the year from where it is right now, it's going to be, I'm 50-50 on that at this stage. And the reason is that I think the reason that it could go up is that we could get some momentum from the other stocks. But I think we're going to have to keep momentum going from the Sexy 7, if you will. If money flows out of the Sexy 7, I'm not convinced it's going to go into the other stocks that have not been moving because of the fact that, well, I think I talked about 5 minutes ago, cash ain't bad right now. So if you're going to take profits, I think there's a lot of motivation to go to cash right now. So for that reason, if it's for being ahead on the year, heck yeah. If it is for being ahead from where it is right now, come December 31st, then I would say maybe. And I'll say the audience either way said, heck yeah. In terms of what I'm watching for next week, any macro news, of course, the Fed is becoming an issue again in the near future. So keeping an eye out for that. And then seeing if we can break through this 4,300 level. That is what I'm watching.
Yeah, you're right. That is the question. I have a hard time. I'm with you. I'm kind of a hard time seeing people, if they start selling their Sexy 7. I like Sexy 7. That's good, too. They started selling the Sexy 7. I don't see them piling into other little small caps or any other things like that. I see them kind of going to cash as well. They want to make their money on the big names they've heard of and get the heck out of Dodge. Looks like our audience is split even in the chat. We've got Age saying, I just voted solid green for this year, closing much higher. We got Nichols in our chat saying, sold to you, Age. I just voted heck no. So there we go. And in our early voting, heck no is taking it right now. Again, it just went live not that long ago, so this is just the immediate blush here. But right now we have heck no taking it 57.1%. Heck yes, only 42.9%. You agree? Disagree? At Options is the place to go to make your voice heard. That music means we are done for this episode today. Listen, but don't worry. We got more coming. I just mentioned the madness that's going on in crypto. We're going to break it all down in a little bit on the Crypto Rundown. All you pro folks can hear it live coming up 2 p.m. Central, 3 p.m. Eastern. For the rest of you folks, stay tuned to the podcast. It'll be up there. If you like Nichols and you missed some part of this show, check it out on the podcast, wherever you find your favorite podcast platforms. And Mr. Meatball, we'll start with you, sir. If folks want to go find some great options or volatility analysis or trade recs or education, where should they go? What should they do?
Yeah, head over to optionpit.com. We're here to make you a better trader and help you learn what you need to know about volatility. And you can read my stuff every day. Andrew writes a nice little piece on our daily newsletter called Pit Stop. So you'd want to come and go to optionpit.com and subscribe to my blog, The VIX Edge.
What are you down with? Mag 7, Sexy 7? What's your preferred moniker, sir?
The Overpriced 7.
Overpriced 7. Okay. I'm also down with that as well. Check them out.
How about the OPS, Overpriced 7?
There we go.
OPS.
OPS. Okay. Yeah. We got that. Could have been our question of the week this week as well. A little bit of an open-ended one. What should we call these ridiculously overpriced names? Send it in to us, listeners. If you believe some of our listeners, they're not overpriced at all. There's more to go. So we shall see, listeners. Mr. Uncle Mike, same question for you. Sounds like you're down with the Sexy 7. And if folks want to get down with the sexiness of St. Charles Wealth, where should they go? What should they do?
Maybe we can call it the St. Charles 7. Well, that could be another one. But anyway, check out my website, stcharleswealth.com, if you are looking for a financial advisor who actually would know what you're talking about if you talked about the Magnificent 7 or option trading or having a plan in case the market goes down. Also, follow me on Twitter at Mike TOSAW, TOSAW.
There you go. TOSAW, the place to go. Mike TOSAW, of course, at Mike TOSAW on Twitter. And stcharleswealth.com, the place to go to learn all about crypto. I'm kidding, of course. All about the sexy 7 and everything else going on. And also, of course, as we discussed today, the sexiness of cash. That is going to do it for the old OB. Back in a little bit with the crypto rundown for those folks in the live. We'll pump some fun live stuff into the chat. We'll be back again with another guest, another great guest joining me in the crypto hot seat. So stay tuned for that. And then back again tomorrow, Pro Q&A Palooza. Our old buddy, Mr. Simon Ho. I haven't talked to him in ages, joining us to talk about all things vol, traditional equity vol, crypto vol, you name it. He's got all sorts of irons in the volatility fire. So we're going to talk about all that. Get your questions in now for the return of the Spikes Father / BitVol Father. That should be a fun one. Wednesday, of course, all things OBC. And then we're back again on Thursday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.